Good afternoon. It's Sunday, October 20th, 2024. It's just afternoon, almost 1 o'clock on the East Coast. This is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube. Hit the like and subscribe button, please. I greatly appreciate it. Put a lot of effort into these videos, coming at you consistently, bringing my best insights, my best takeaways, my best analysis every single week. It also helps us to get good interviews with CEOs and other market participants. So you get the best content, the more popular my channel becomes. But anyway, who cares about the likes and the views and all that crap? It's all bullshit. Wow, what a week. Another incredible week. Gold up 2% on the week. Silver up almost 5%. Some of the miners up 20%, 30%, 40%. We're seeing some big moves out there. What is happening in gold and silver? Like, what is driving this? Funny story. I was talking to another investor last week, and he said something that made me laugh, and it's actually true, though. He said, you know, I'm a little scared. All the bullshit we've been talking about for the last few years, it's actually happening. It feels like it's actually happening. And I'm scared, you know, and that's funny. That's really funny because you think about like gold bugs, silver bugs, junior mining investors, like we're talking about de-dollarization, the end of the dollar as a reserve currency, central banks accumulating gold reserves, the huge budget deficits, the government debt, the unfunded liabilities, the Fed having to monetize it. We talk about all these fundamentals 2016, 2017, 2018, 2019, 2020. And nobody really paid attention to it, like, because it wasn't showing up yet in the market, right? It's that saying, at first slowly, then all at once, right? And that is, it feels like that is what we are seeing in precious metals now. And actually across markets. At first slowly, then suddenly all at once, right? It's like slowly the pebble starts to roll, and then it gains a lot of momentum and you have an avalanche, right? Like it's that sort of a thing, right? But yeah, he made me laugh with that, like all this bullshit, right? Because I feel like a lot of gold bugs have a lot of confidence, a lot of conviction in their thesis that the huge government debt and unfunded liabilities and deficit spending is going to come home to roost. And they've had a lot of conviction since, as far as I can, recall, 20 years. And now it's playing out, right? They've looked kind of silly at times over the last couple of decades. They've been wrong at different times. According to Mr. Market, their concerns haven't been prominent. Right? They haven't been what was moving the market. And here we are, right? Their concerns are actually coming to the forefront now. So, but what is really moving the gold price here? Like what is actually the driver, the proximate cause of this? I would call it now a running bull market. I mean, I would really call this, what we're seeing since August, this is a running bull market. There's no resistance. There's no level that you can point, well, it stopped at that level a few years ago. It's going to stop again. No, there's no overhead supply, right? Like, sure, 3,000 is a round number. We can pull out of a hat and say, well, that's going to be a key level, a key upside level, but we don't know, right? There's no reference point. There's no reference point we can pull from history to say, that is where the supply is going to be. No, we don't. We just don't know, right? This is blue sky breakout in gold. And what's happening? So I'm going to give you my take. I obviously don't know. I'm not omniscient. But my take is that this move is still being driven by the East. This move is still being driven by a de-dollarization trade from China, from Russia, from India, from other central banks, including the Saudi central bank, which appears to have been buying gold in a stealth fashion so as not to upset the U.S. too much. But we don't know, but multiple central banks are on the bid and have been on the bid since mid-2022 in gold. And we don't even know the full extent of their buying. But the fact is the bid is relentless. And it seems like it's been accelerating in recent weeks. Could some of it have to do with the prospects of Trump being president? Now, I haven't put up any polymarket charts. I haven't even put Trump in the type here because I know that YouTube will suppress this video, will downvote it. I won't put Trump in the title. I won't even put the word election in the title because they suppress anything that they construe to be pro-Trump. I'm not political. I'm not pro or against in this video, but I'm just calling it like I see it. I think pretty clear that Trump has the edge here. He is, based upon the odds, most likely going to be the 47th president of the United States. Market participants clearly have been positioning that way in the last few weeks, and I would assert that part of the gold move has to do with that as well, that the increased likelihood that Donald Trump will be the 47th president of the United States. Now, why is that? Well, I think number one, it has to do with Trump's tariff policies. China, clearly is not a big fan of Trump. Even though whatever the media says about Putin and Trump, I'm not even sure that Russia is actually a fan of Trump. And it's quite likely that any other country, like Iran, for example, that is de-dollarizing and doing trade off the dollar will feel Trump's wrath, right? He seems to be pretty pro-tariffs. I'm not sure he understands fully how tariffs work. Sorry to the Trump fans. Again, I'm not political. I'm just calling it like I see it. Yeah, I think there are serious de-dollarization flows into gold out of a concern of what a Trump presidency will look like. Now, even though if Trump wins November 5th, he won't be president until January 20th, right? So these flows could continue for several more months, okay? Because then, even once he's president, it'll take a little bit of time to get his policies into action. But clearly, I think there's a little bit of a fear trade into gold front-running a potential Trump second term. Just the less reliant countries are on the dollar and treasuries, the more latitude I think that they have to trade elsewhere. I also think that just there continues to be this gold recycling trade, recycling of other fiat currencies into gold. So what does that mean? Well, clearly Russia has been sanctioned by a large portion of the global economy. Well, they're still selling their oil to fund the war in Ukraine. Well, how are they doing that? Well, they're selling it to India. They're selling it to China. They're getting paid in those currencies. When Russia gets rupees, Russia doesn't want to hold rupees. They might buy some other things from India, but generally they're going to trade those rupees for gold, right? They're going to recycle some of that paper currency they get from India into gold. And I think you'll have other countries doing that, and they have been doing that. So there's a recycling trade of the de-dollarization trade flows, the non-dollar trade flows in the East, into gold. We're trading fiat. Now, whatever that fiat is, it could be dollars, it could be euros, it could be rupees, it could be rubles. We're exchanging those for gold around the globe because there is an increasing recognition and acceptance that fiat currencies are a race to zero, right? It's a gradual and maybe increasingly accelerating race to zero. Also, Trump's spending plans. I mean, I'm not clear on what his platform. I'm not even clear on what Kamala's platform is. But from what I understand, he just wants to cut a lot of taxes, and he's got a lot of spending plans. And he just thinks the economy is going to be great, so we'll get more tax revenue. It'll all balance out. I'm not sure he's done the math. But he wants to cut taxes on everyone, it seems. And the deficit, I mean, it's already $2 trillion. It's been in the trillions for the last 5 years. Both Biden and Trump have been big deficit spenders. Nothing's going to change under Trump or Harris. So really, regardless of who wins on November 5th, the deficit spending is still going to be astronomical. Gold is clearly sniffing that out. A big chunk of the flows into gold are, investors accepting that the Fed is going to have to finance the Treasury. The Fed is stuck here. It almost doesn't matter whatever inflation is, whether it's 3% or 2.5%, the Fed's going to cut. And they're going to have to do QE again in 2025. So we could go on and on. I mean, the bullish case for gold is just so multifaceted, so powerful. And the market is confirming it, that the price action is all you really need to see. This is a running bull market. This is a running bull market. And I published this, what was this, Friday, miners enter the whiskey bottle into the shot glass stage. So excuse me for, a little bit of euphoria, a little maybe exaggeration here, but it is actually feeling like this sector is entering this stage, this once every 5 or 10 year stage in the cycle when it feels like somebody is pouring a whiskey bottle into a small glass and it's spilling. The whiskey is spilling out everywhere, all over the table. The money is spilling out everywhere, all over the sector. Still very early in this move, but last week it started to feel like that. We have Eric Sprott cutting big checks again, right? We've got some M&A. Silvercrest gets acquired by Core Mining for $1.7 billion. We've got some deal flow. We've got some animal spirits starting to move into the sector. Newmont, the biggest gold producer in the world, is leading the charge, making 52-week highs almost every day. Newmont reports earnings this week, Wednesday after the market closed. But look at the moves in IAM Gold up 17%, Blackrock Silver just absolutely breaking out. 52. Now, these are, Dolly and Blackrock are silver trades, right? These are two of the junior silver vehicles that hedge funds will jump into to participate in the silver trade. I don't think this is any anybody knows anything about assays or anything company specific in either of these stocks. I believe this is just silver flows, some capital flowing into silver miners. I think it's really as simple as that. And also, I'm skipping ahead here a little bit, but where is it? Vizsla, another one of the silver juniors, right? The go-to names, also breaking out to multi-year highs. Technicals look fantastic on this weekly chart, but it's all starting to work again. Sorry for this small type, but anyway, the point is, also a lot of investment banks are raising their price targets. A lot of investment banks going to 2,900, going to 3,000. This is Haywood. It's hard to read. Well, they've gone to 3,300 in 2026. It's Canadian. It's a boutique investment bank. But still, 3,300 in 2026. Wow. So it's like the juices are flowing. The party is getting underway. We're not at the stage where everybody has to go home from the party yet. The party just started. It just started. And we're just entering the whiskey bottle into the shot glass stage. The Canadian, the TSX-Venture Composite, look, it's going up. It's actually going up since early September. Remember, everybody hates this index, and everybody hates the venture and the micro-cap stocks in Canada, right? They're awful, right? Everybody agrees they're awful. They're going up. They're going up. And going to the weekly chart, just ever so slightly, you might need a microscope to see it, but this is completing a multi-year head and shoulders bottom pattern in the TSX Venture. So we can all agree, everybody hates the TSX Venture, everybody hates the juniors, everybody hates Canadian microcaps, and they're starting to go up. Right? So this is that classic setup, just like we saw start to play out earlier in the year in the senior producers. Everybody hated Newmont in February. Everybody hated gold and silver producers in February. And then they started to turn higher, right? And then they just kept going higher, right? So we're getting this setup, this sweet setup where sentiment is still negative, yet Mr. Market and price action is saying it shouldn't be so negative, right? Kind of setup I like. So let's start closing some of these. IAM Gold, we talked about this. I mean, I've pounded the table on this for the last year. Obviously, if you watch these videos, if you know me, I'm a big fan of IAG. This has been working all year. It's worked huge on Friday. What is happening here? I mean, clearly the Côté mine is working. They reaffirmed guidance last week, and clearly there is some speculation that this could be one of the next takeout candidates in the gold mining sector, and M&A is picking up. Blackrock Silver, we talked about that. Silver makes a new 11-plus year high on Friday. This is the weekly chart, so it closed at a new decade-plus high on Friday. The technicals look very bullish. This isn't even, the relative strength index on the weekly is not even at 70 yet. I mean, again, this could still be early in the move. You know, I don't want to be that guy who gets more bullish at a new high, but I'm just calling it like I see it in terms of the chart technicals. Silver still looks like it has more upside left in this move, okay? But hopefully, if you've been watching my videos, if you've been following this stuff, this content I've been putting out for years, your cost basis in silver is much lower, at 25 or even lower, in the low 20s, or maybe even in the teens, because that's how long I've been talking about it. I did a separate video on biotech, but we had this crazy move in Bright Minds Biosciences last week. There was actually a reason for the move. 5-HT2C super agonism candidate, they have it. They have a whole bunch of novel chemical entities. They call them NCEs. And the acquisition of Longboard, which happened last week, $2.6 billion buyout. Lundbeck buys Longboard Pharmaceuticals for $2.6 billion, basically validates their technology platform. So basically this company that was sort of just left for dead, going nowhere, nobody paid attention to it anymore, that's been focused on the 5-HT2C platform, suddenly this buyout validates everything they're doing. And suddenly, boom, it's worth a lot more, right? That being said, I said in the other video, don't chase this move. The company has started a financing, a $35 million financing at 2170. The CEO sold some shares last week, and he's got a big gain. I mean, like a windfall win for the CEO of this company. It's not a pump and dump. I think it's real. And I think there's more that's going to be happening here in brain health, mental wellness space, and the sort of 5-HT2A, 5-HT2C product candidates will be at the forefront of brain medicine. So we're just seeing, I believe we're just seeing the beginning of this space start to take off. But as far as drug itself, DRUG on the Nasdaq, I wouldn't chase it up here. Let it come back down closer to the 2170 financing price. But that was a real move based upon a real merger, a real acquisition that occurred in the sector. And here they put a news release talking about their BMB 201 compound. Moving on, nuclear energy. I mean, a lot is working out there across the resource sector. Cameco, Denison, NextGen, and I could go on. I blogged about it on my Substack. Please subscribe to my Substack. You get a lot of good content. If you do the paid subscription, you get everything as soon as I put it out, including the premium posts, which I don't share publicly. But there's a lot of good news. There's a lot of good news in the nuclear energy sector, and obviously that benefits uranium miners. Okay, so this sector has been working. It continues to work. They even gave us a correction in August and early September, a real tremendous buying opportunity in this space. Cameco got down to 36. It's 58 as of Friday's close. There's always a bull market somewhere. Uranium is working. Nuclear energy is making headlines. Clearly, nuclear is a big part of a green energy future. What's with oil? So there's a lot we could talk about. Well, I'm not an oil expert, but I can look at the chart and I can tell you this is one of the worst performing commodities out there in 2024. Can't get out of its own way. We've got war in the Middle East between Israel and Iran. It had a brief, short-lived rally and just round trip back down under 70. Well, there's a theory out there that Trump is bearish for oil. Maybe oil went down last week, well, because maybe things aren't as bad as they were feared to be in the Middle East, but also a Trump win means drill, baby, drill, more production, more supply of oil. But you could also flip side, well, he's going to put sanctions on Iran, so that's going to cut global supply of oil, but Iran will be able to sell that oil to somebody no matter what, right? So you got to kind of think of it that way. But Schlumberger offered cautious guidance last week, got hammered, down 4.7% on Friday. Basically, customers are pulling back spending across the oil patch, and Schlumberger is feeling it. That being said, I feel like this move, the downside, the bearishness in the oil sector is getting close to being overdone. I think Kamala win would be bullish for the energy space because she's not going to drill, baby, drill. So you're going to have less supply. Sure, she might be tougher in the regulation side of things, but I really don't think she wants to risk a big surge in oil price that's going to spike inflation again. So I think honestly, she's bullish for oil. She's bullish for the oil sector. I think he's bullish for the oil sector because he will be more favorable in terms of his policies towards the oil sector. And I really don't think there's going to be just like this ocean of oil that's going to come up, just because Trump is president, right? I think the fears are a little overdone. The market's giving the future president a little too much credit for how much that they can move markets and move a global market like crude oil. So my bias is to really want to buy this dip in stocks like Schlumberger. Okay, I think, and actually you can see there's a little bit of a potential head and shoulders bottom forming here. Let's see how this plays out in Schlumberger next week. Obviously, the technicals don't look positive, but sometimes that is the time to step in and buy. But crude oil is very weak, very bearish sentiment on it. It's one of the most hated markets out there right now, so that has me a lot more interested. You can see just like 6 days down in a row. It was down every day last week. Lithium, Albemarle. So I am long this one. This is more of a longer investment, like months, like actually holding it for like maybe into next year. Bottoming tails here on the weekly. Obviously, we know the lithium sector has been badly pummeled in 2023 and 2024. I feel like it's working on a little bit of a bear market bottom here. The bottoming tails are the strong evidence of that. We need confirmation, but there's a lot of signs that the supply is not going to be quite as large as previously feared. Also, a big project in Serbia looks like it's meeting fervent opposition from the public. So that was supposed to come online in 2028. Doesn't look like it will. So maybe the oversupply fears are a little bit done in lithium. American Airlines, so this is just how manic the market is and the perception of the economy. Like summer, it looked awful and the airlines were doing terrible, and now all of a sudden everything is great again. It's weird. This is a weird economy. I don't think this is like any economy we've seen previously. And it seems that the perception of it seems to change rapidly from month to month, violently even. I'm not sure whether that is just how manic we are and how hypersensitive we are to little pieces of news and sound bites these days, or actually if, people, respond so quickly to how they're feeling about the economy that they cancel trips, they cancel vacations, they cancel hotel reservations, and like we saw during the summer, and then they book everything and want to go flying again when they're feeling a little bit better now, like it appears they are here in October. United Airlines had a lot of positive things to say, recently. So it's weird, and I think that's why the Fed is so challenged here in making monetary policy and responding to data points. There's an increasing sentiment that their 50 basis point rate cut was a mistake last month. I don't agree with that, but certainly there are a lot of people clamoring about that now. We'll see what they do in November. I think it's pretty much a lock. It's going to be 25, but it'll be interesting to see what the Fed has to say there 2 days after the election. We talked about Newmont. So these guys report Wednesday after the close. I wrote about this on October 3rd. This was a public free post on my blog. But basically, I'm calling for a really good quarterly report from Newmont. The stock was at like 53 at the time I published that. Well, here we are at 57.62. Not that much higher, but clearly there is some positivity heading into this quarterly print on Wednesday afternoon. We'll see if it turns into a sell the news event. But frankly, I think you could still have more upside to 60 or maybe even 62 here in the near term in Newmont. But that'll be a widely watched quarterly report from Newmont, and then the conference call on Thursday morning will definitely be a big, very impactful event in the gold mining sector. And then, yeah, final thing, just the juniors. So like Founders Metals breaking out. This gave another entry point back in August and early September when a bunch of the management decided they had to sell to exercise options because of the tax liabilities involved. They did about as good a job as you possibly could do when you have a bunch of management selling pretty large amounts of stock. They sold it all to one entity, a fund, and it was basically crossed privately. And now here it's making new highs as the gold price makes new all-time highs. So Founders Metals absolutely working well. Dolly Varden, look at this, trying to break out above a major long-term level around 120 a share. Let's see if this has more follow-through, but this is very significant. This push up here to 130 at the end of last week, and you can see the monthly relative strength is just beginning to confirm this breakout. Let's see, because you can look back here 2016, it failed. 2018, it failed. 2020, it failed. 2023, it failed. But maybe this time, whatever, the fourth time is the charm. We talked about Vizsla before. This is also a new multi-year high for Vizsla, big silver explorer in Sinaloa, Mexico. And then, you know, what would a video be without Hercules Silver? This was up 10% on Friday. So it continues to trade in this range. It seemed like there was a little bit of accumulation there at the end of last week, Thursday and Friday. I wonder if the Friday buying was just due to the silver price breakout. You know, recall this company used to be a silver company, a silver explorer. They still have quite a bit of silver, but it's clearly much more of a copper junior now. I wonder if some of the flows into Hercules on Friday were just simply due to the silver breakout, but I don't know, right? Don't know. But it's still in this range until it gets free above 76 cents or breaks down under 50 cents. It's still range bound. And that's it for me this week. Again, if you enjoyed this video, if you appreciate my content, hit the like button, subscribe to my channel, and definitely get on that Substack, Goldfinger Capital. Thanks for watching, and have a powerful trading week.